Well, on the surface, it probably felt like a lackluster day as the S&P 500 finished flat, but there were some positive developments. Russell 2000 hit yet another all-time high. We saw the sectors of technology, consumer discretionary, and real estate hit new three-month highs. And of course, a lot of the other sectors are holding their own as well. Our trade application today is going to focus on a sector that had been hot up until a couple of weeks ago, has recently cooled off, but very well might be gearing up for another run here going forward. So with that, let's go ahead and get started. Welcome to the Market Outlook video. I'm your host, Brandon Van Zee. It's June 5th, 2018. If you're new to these videos, first of all, welcome aboard. Great to have you here. You can subscribe to our YouTube channel by clicking the subscribe button. You can also give us a thumbs up if you appreciate these videos on a daily basis. Feel free to comment as well. For those of you that want to sign up for our email distribution list, you can find a link to that in the description area of our YouTube videos. In addition to YouTube, we're also heavy users of Twitter, which, by the way, hit a new yearly high here today as it was added to the S&P 500, or at least that's the rumor floating around that they will be replacing Monsanto. But anyway, Twitter is a great place for us to share information with you and for you to share information with us. So we would encourage you to follow us on Twitter. My handle is @BrandonVanZee, all one word. And remember, David and I always pin the Market Outlook tweet to the top of our timeline. And so if you get value out of these videos, we would encourage you to click like and retweet on those Market Outlook tweets. We're also on Facebook. So if you want to join our Facebook group, make note of that web address that you see on the screen in front of you. All right, with that, let's go ahead and dig into some of the analysis of the markets here today. As you can see, I do have the S&P 500 chart pulled up in front of us, and as I mentioned in the intro, we were flat on the day. We closed up by just under 2 points. That was a 0.07% move. The good news is it was our third straight up day. Not much of an up day, but at least we got one, and of course, that continues our streak of bullishness from a posture perspective. Now remember, when we talk about posture during these videos, unless we tell you otherwise, we're referencing the intermediate term posture. For the market forecast indicator down below, that intermediate term posture is represented by the green line as opposed to the blue or the red. And you can see right here that the shading color of our charts is also that darker green color right now. That also signifies that we currently have a bullish posture on this particular chart, which in this case represents the S&P 500. Now you'll notice that we also got a bullish intermediate confirmation signal here today as well. It wasn't one of our enhanced or ideal setups because the blue line remained in the upper reversal zone, but indeed we do have that green line with a bullish posture and at the same time have that red momentum line in the lower reversal zone. So those two things do constitute a bullish intermediate confirmation signal. Again, typically you're looking for kind of a buy the dips mentality when you're looking for those. Right now we don't really have one, so I wouldn't really phrase this as an ideal setup right here, but nonetheless it does exist, so we'll see how that plays out going forward. Let's go ahead and take a look at another chart here, and this one will be chart 4B for those of you that are following along at home that have gone through my charting tutorial at Market Scholars. For some reason, we're taking our sweet old time. There it goes to load up here. And this particular chart, 4B again, is going to show us basically the four major U.S. indices. We've got the S&P 500 in the upper left. We got the Dow Jones in the upper right. Got the NASDAQ in the lower left and the Russell 2000 in the lower right. Each one of these charts is 1 day in the candle aggregation period and 3 months in length. So as we look at this, you can see that the Russell 2000 that I mentioned in the intro hit a new high today. In fact, the NASDAQ did as well. Kind of talked about those FANG stocks doing real well here today. Amazon and Netflix hitting new all-time highs. But you will notice down below as you're looking at the Russell 2000, there's this label that will appear anytime we're hitting a new high on that particular day that we're looking at it. So with the Russell 2000, we're hitting our yearly high today. You can see that label appearing over here on the NASDAQ as well, yearly high today. We are not hitting our yearly highs on the S&P 500 and the Dow Jones, however. As we're looking at these various charts, I would say that the Russell 2000 continues to be the stalwart. It has been for quite some time. Some people were saying, when the Russell 2000 was leading us a few weeks back, that it was just a head fake. Well, this must be one heck of an extended head fake here, because they just keep on zooming higher. So, you don't want to get in the habit of fighting the trend. You might not agree that stocks should be going up, but at the same time, you might leave your account in a worse financial position if you kind of go and get in the way of that established trend. Right now, clearly the bulls are in control, at least in the Russell 2000. You can see down below here that we have a green line on the on the moving average, which tells us price is above a rising moving average, and we have that in all 4 of our indices cases here today. So strong markets across the board. Yes, there are a few flies in the ointment. Might not be the best for mega cap companies right now with some of the trade worries out there, but generally speaking, this has been a bullish environment for stocks, and those of you that have been on the right side of the trade, meaning long stocks, have likely benefited from that. Let's take a look here at our 3 green arrows setup now. And when we're looking at this, remember the background colors are a little bit different than what we saw a moment ago. Here we're looking at 3 green arrows, which is a technical setup that involves a 30-day moving average, the MACD, and the stochastics. And when we see the green shading like we do with the S&P 500 here today in the background, what that's telling us is we do have 3 green arrows, and we got that as of today on the S&P 500. You'll notice that the MACD kicked into a green arrow right there as it went up and above that 0 line. So that's generally perceived as a positive thing as well. Right now we've got a mix of arrows on the Dow Jones, and that's why the background color above today's candle is white there. But on the other 2 that I mentioned before that had their strength according to the market forecast indicator, also according to the 3 green arrows, you also are seeing some strength. The NASDAQ down below here clearly got 3 green arrows, and then the Russell 2000 just yesterday kicked into 3 green arrows yet again after a little bit of a time off period right there. So again, more signs than not that we are seeing bullishness in the current marketplace. As we look at our next chart setup, this one will go to chart 4D. This will be our longer term chart here. Again, same 4 major US indices here. The difference in this chart is it's a little bit longer term. These are 3-year charts we're looking at here, and each one of the candles is 1 week in length. What we're looking for are crossovers of the moving averages themselves. Right now, we don't really have anything to fear from that department. We remain bullish. Now, remember, we've had a bullish long-term posture using this particular 1040 crossover method for over 2 years at this point. And at this point, I don't really see a reason to expect that to change anytime soon. The one chart that on the board in front of us that maybe is the closest to having a crossover is the Dow Jones. That's the one that's been struggling a little bit more. But even that, you can see, has really kind of kept the distance between the orange and the blue line. The orange line would be the 10-period moving average. The blue line would be the 40-period moving average. But as you look at the other charts, you look at something like the Russell 2000, that orange line really kicked into high gear. We're now hitting new highs not only in price, but also in the 10-period exponential moving average. Same thing can be said for the NASDAQ down below. As we move on and take a look at a few more charts here, let's do some 12-grid analysis. And as that's pulling up here for us, there we go, it's going to show us the 12 different charts that we look at from an intermarket analysis perspective. First of all, for those of you that like to look at the VIX, notice that's our chart in the upper left there. VIX was down 2.6% here today, and we're getting close to breaking to new 3-month lows. We did have this one kind of glitch out of the ordinary candle right here, but otherwise we're basically sitting at a floor level there in the VIX. So remember, typically if you're a seller of premium, juicier premiums are created by a higher VIX. That's not something that you've been able to see here recently. We did sell a put on a dividend aristocrat company here in my class earlier today, for those of you that were there. So we still were able to find a couple of good candidates out there, but largely it's been a little bit more difficult to find those sold put candidates now that the markets have bounced for the last couple of weeks. As we look at some of the other charts on the board, you will notice that we've got a kind of a breakout going on here in preferred stocks. So that's kind of interesting. Not a lot of people talking about preferred stocks, but take a look at PFF right here. That's been a strong move off the bottoms right there. We also see that the master limited partnership space is coming to life here yet again after a little bit of a time off. Had a nice bounce off of that 30-day moving average. Now we're up there near 3-month highs yet again on the master limited partnerships, which remember are typically oil related, in particular the midstream energy pipelines and transportation areas is typically where you're going to find those MLPs. So that's an area that I think you should probably keep your eye on as well. And as we look at other charts, not a whole lot to report other than I do want to make mention down below here. Notice crude oil, which is our chart in the lower right-hand corner. That had been our stalwart up until about 2 weeks ago, and then it really started falling pretty quickly. Now, it fell so quickly that you'll notice what happened here as of yesterday's close. We got what's known as an oversold cluster signal there, and oftentimes that can be a reversion to the mean type of a trade signal right there. So we're going to keep our eye on that. Our trade application a little bit later today is going to come from that oil space, and so we're hoping that that reversion to the mean move can take place to the upside on crude oil. Let's take a look at another 12 grid. In this case, let's go to the foreign stock markets. You can see things are shaping up nicely here too. You know, it wasn't too long ago that we had more of a mixed bag with bullish versus bearish posture. So as a reminder, when you're seeing these green background colored charts like we do in all of the cases except for Brazil and Mexico, that means that we have bullish intermediate term postures according to the market forecast indicator. And so right now, that's a good sign. With 12 charts in front of us, 10 out of the 12 are showing that bullish posture. As we're looking for trends out there, that does leave a little bit to be desired. Yes, it's nice that we have bullish postures, but it would be even nicer if we could team that up with very consistent higher highs and higher lows, and we really don't have that. Probably the strongest market on the board is here with Israel. We're near 3-month highs, but even that, we're still a little bit below where we were trading on March 14th. So despite the bullish postures across the board, price action still has a ways to go before we get really excited about some of these charts. Now, there are a couple of charts that are strong here, but they're the negative strong charts, meaning the bearish trends are strong in terms of Brazil and Mexico. Notice that these are very substantially strong trends to the downside. So that means for those of you that are looking for bearish trade opportunities, those are the ones that just cannot get out of their way right now. So whether you're looking at the overall markets in Brazil and Mexico, or whether you've handpicked a couple of individual ADRs from those markets that are still traded here in the U.S. Markets, you know, that could be a place to start looking for some bearish opportunities for those of you that are looking for that. Let's now take a look at the U.S. markets exclusively and look at the U.S. sectors in this particular case. So again, things are looking pretty bright here from a posture perspective. All sectors except for the utilities down below are showing bullishness according to the market forecast intermediate term posture. And so as we look at these charts, I'll mention what I mentioned in the intro, which is technology, which is that kind of the third chart on the top, discretionary, which is the fourth chart on the top, and then real estate, which is in our bottom right-hand corner. Notice that all three of those charts hit new 3-month highs here today. Now, we did have a reversal in real estate, so that one doesn't look as promising because we did close lower by 0.5%, but earlier in the session, we did tick to a new 3-month high. So the trend there still remains to the upside despite having a negative close on the day. Whereas if you're looking at discretionary and technology, wow, those areas are really starting to perform. Now, I mentioned the FANG stocks. And so, you know, keep in mind one of the kind of crossover FANG stocks that involves both discretionary and technology is Amazon. Now, Amazon is a stock that we've owned in my in my trend trading class account for over a year at this point. So we're kind of cheerleading that particular FANG stock on, but you'll notice that it's really geared up here just recently after taking a little bit of time off. So let me go to just a regular chart right here and show you Amazon, and you'll notice that it quietly kind of just was forgotten about for maybe 3-4 weeks or so. It topped out over here in March and couldn't really get it back into high gear until more recently here at the beginning of May. Well, you'll notice that we now have had 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row to the upside for Amazon. And yes, ladies and gentlemen, that is a new all-time high for Amazon right there. So back to the 12 grids. Remember, Amazon is technically considered a consumer discretionary stock, despite a lot of people thinking that is a technology stock. You could see how it could be categorized either way, but according to the global industry classification system, they do put it in with the discretionary stocks as more of a kind of like a retail name, even though most of that retailing is done online, and that's why a lot of people think of it as a technology oriented stock as well. So either way you slice it, that mentality of that style of an investment pick is doing really well and helping to support both technology and discretionary right now. A couple other stocks I noticed in the discretionary space that were moving today. Some of you that follow my 9 at 9 on Twitter every morning at 9 a.m. Eastern time, letting you know which stocks are up the most and down the most in the pre-market. I did notice a lot of cruise ship operators on the downside here today. So apparently David Settle didn't spend enough money when he was on his most recent vacation with the cruise ships there. But all joking aside, we also saw that another big discretionary stock in the news today was Starbucks. Some of you might have noticed that Starbucks' previous chairman, Howard Schultz, is going to be stepping down, and there's a lot of speculation that potentially he'll throw his hat in the ring for presidential nomination at some point in the next couple of years. So we'll see how that develops, but Starbucks did finish a little bit lower, kind of bucked the trend of the rest of the discretionary space. We saw a number of discretionary stocks. I did notice Target hit a new high. So Target's had a really beautiful move here in the last couple of days. Let me make this a little bit bigger so we can see that. Notice that Target was just right here, came out on its earnings and really spilled over. It was hanging out right below that moving average, and then the last 2 days, just kind of out of the blue, started to supercharge to the upside. I also noticed that some of the retailing names like Macy's doing really well. Check out Macy's, up 8% here today. Take a look at the size of that candle right there. That was already a new yearly high as of yesterday, and just surged even higher. So let's take a little bit longer term view here. You'll notice that Macy's on a 3-year chart, their next level of resistance is going to be right up here, where we were trading back in November of 2016. But it's good. It's done a good job of kind of making that cup-shaped base right there, particularly given the fact that a lot of folks were basically writing off these retailers for dead, assuming that the mall is dying and therefore the retailers within the mall are dying. But a lot of them are coming back to life. Another one that we've been following closely in my classes recently has been Tiffany. And of course, Tiffany hitting new all-time highs here today. Let me kind of zoom this one back into a more recent chart. So this is a three-month daily candle chart, and you'll notice that they basically tick higher almost every single day. At least that's the way it feels here. So a lot of strength in a name like Tiffany here recently as well. So that's what I had for you there on the sector analysis today. Before we get to our trade application example, I do want to point out right here on energy that we do have a bullish posture on XLE right now. Where we're at is still a pullback from those recent highs where we did get those overbought cluster signals and reverted back to the mean, but now we're sitting right at that moving average, potentially going to be using it as a launch pad going forward. So I wanted to take a look at one stock in particular. Let me go back to just a regular one grid chart here and pull up National Oil Well Varco. This is ticker symbol NOV. you'll notice that just yesterday we got our bullish posture back. So we're back to looking at these charts where the green background will signify a bullish posture using that intermediate term line. You'll notice that for a while right there, we had a little bit of a bearish posture as this thing kind of topped out at about 45 and then spilled over. But the good news is it held up nicely above that rising moving average. Despite having that bearish posture there, we still maintain that stronger trend. And as you can see, this is a stock that's really kind of respected that 30-day moving average the entire 3 months of this chart. You know, it's come down and maybe breached it a couple times back here in early April, but largely it's kind of used that moving average itself as kind of a launch pad to keep on moving higher. And of course, the major peaks on this chart represented by this one and this one still point to higher highs and higher lows. So we're hoping that will continue. We did have a bit of a bullish engulfing candle here today as well, I might add. As you can see, the candle's body of today did engulf the prior days. That's generally perceived positively there as well. So we're going to do a very simple bull put spread on National Oil Well Varco here as our trade example here in Paper Money today. So with that, I'm going to come over here to the trade tab. And I've got NOV pulled up in the trade tab here using the Thinkorswim Paper Money platform. I'm looking at the July contracts. These are the monthly contracts with 45 days until expiration. And you'll notice over here, if we're looking for a delta of 30 to kind of look for our sold strike, we do have one at 29, which works out nicely for us. So that's the $40 strike in this particular case on the put side of the equation. I'm going to right click. I'm going to go to sell vertical. That will then load up our trade down below where we're selling the $40 put and we're buying, that's why we got the plus sign over here, the $39 put. The net effect of those two things is we have a credit of 24 cents. Now, for those of you that have done those calculations in the past on return on risk, you'll know that 24 cents is exactly at our 30% return on risk. If you don't know how to do that, just simply click confirm and send. Get your calculator out and then take the max profit. Now this is just an example using one contract, but obviously you're going to position size for whatever size of account you have, and the numbers will actively reflect that. So here, if we just did one contract, it'd be 24, which is this number right here, max profit divided by max loss, 76, and that equals 31.5%. So just over that 30% return on risk that we oftentimes shoot for when we're selling these credit spreads right here. Now, if we were to look at that, you know, first of all, take a look at the break-even price is $39.76. So basically what we're saying, for those of you that are newer to options trading, this stock that's trading at $42.05 right now, we would want it to stay above $39.76 through expiration if we felt like we wanted to make some money on this particular trade. So if you think that oil stocks are going to crater from here, this is not a trade for you. On the other hand, if you think oil stocks will stabilize and maybe even bounce higher, then this is one that could be worthwhile taking a peek at. So if we go back to the chart, let me show you where 39.76 is on the chart. It would be about real close to right there. I can't get my mouse right on it, but call it about right there. So in other words, the stock would have to come down, not only come down significantly below the rising moving average, which it really hasn't done in over 3 months, but it would also have to breach this prior bounce zone that we saw here at the end of May as well. So we'll see how that one does. Of course, just a practice trade just to highlight the idea here. So let me go back to the trade tab, click confirm and send, and we'll ship that one off and see how it does. All right, well, I want to thank you for joining me here tonight. Another interesting day in the market. Like I said, some of the hotter areas that you'll want to keep your eye on right now, technology, discretionary, and even some real estate kind of coming into play there. So keep your eyes on those areas. If you're looking for bearish trades, that's where maybe Brazil and Mexico have some appeal to the bearish side of the equation as well. So with that, I want to wish you all the best with your trades and your investments. Dave should be back with you tomorrow. And remember, if you get value out of these videos, make sure you click like and retweet on Twitter for me as well. So with that, have a great rest of the night. Take care, everybody. Bye-bye.